Hey everyone, me Kevin here. So we finally have a time frame for when we might hear that Jerome Powell is getting replaced from Joe Biden. This is very big, this is very important, and we have a time frame for this now, and this is going to be important for the stock market and potentially real estate as well. I'm going to give a few updates first though on some updates regarding what's happening in the marketplace and the economy, and then move into the Federal Reserve. So first, Walmart was really a bellwether here, and Walmart, I don't think people were expecting Walmart to beat as well as they did, with high profit margins despite inflation, certainly margin pressures, but still, sales doing really well. Retail sales up this week, industrial production up this week, rents, housing confidence, all the indicators of growth in our economy are actually booming right now. I shouldn't maybe say all indicators, but a lot of the indicators that we got this week, aside from the inflation numbers that we got last week, very, very strong. And sure, while we're seeing issues with inflation and supply chain crises, Walmart's a really good tell, and they're seeing supply chain issues and shipping issues and constraints begin to ease. We also had a former executive from Macy's mention that even though a lot of individuals pre-purchased a lot of things that they were expecting to get shipped for the holidays, there are now expectations that consumers might have spent money once in September and October in preparation for the holidays, but now might be tempted to spend again in November and December because overall household wealth and household savings are at elevated levels and people are willing to spend. People feel good, especially with the stock market soaring, which it's been doing like crazy right now. People feel even richer and more likely to spend. In my opinion, this is the perfect time to kind of look inward and go, how can I start raising cash? How can I spend less money? How can I be prepared for the next dip opportunity? Because I personally don't like chasing the market when it's going up. I spent 6 months buying the dip during the crisis we had earlier in the year. But I have to say, in terms of the indicators that we've gotten so far this week, industrial production, retail sales, consumer confidence, consumer spending, the earnings reports that we're seeing, we're seeing lingering effects, and in some cases large effects of inflation and supply chain issues, but they're really starting to get put by the wayside, and really the stock market is starting to represent a more efficient future for companies. Look at Enphase. Enphase going from 145 to 250. This is one of my largest holdings. That's nuts. It's insane, but it's potentially because people were bagging on Enphase because of supply chain issues. Now we're starting to see them ease, so the stocks run. It makes a lot of sense. And Enphase, very, very high margin business. Now it's got a nice multiple attached to it, but boy, oh boy, this is a profitable and sexy energy play as well. Love Enphase. But anyway, it's worth noting that, and this hasn't happened yet, but a lot of economists are expecting that we might actually be bumping Q4 GDP figures and estimates, and that these bumps could actually further support the stock market rallying. And we're seeing a lot of euphoria right now, which you always want to have a little grain of salt when you get a lot of euphoria, because that sort of euphoria can definitely U-turn very quickly upon bad news. For example, Janet Yellen today mentioned that we are going to run out of money between December 3rd and December 15th if Congress doesn't essentially pass the debt ceiling again and deal with the budget deficit again. So you've got two things expiring again. The debt ceiling is going to get hit, and we're going to end up dealing with a government shutdown again at the beginning of December if we don't get another bill passed through Congress. Now, of course, Congress, specifically the House of Representatives, are planning on passing a new, the Build Back Better plan. They're still working on the framework of this, though, which is crazy because they've been working on the framework for this on this forever. And they don't have that much time left before we're in December. We've got 11 days until Black Friday, which, remember, that's when the courses linked down below have another price increase. The price will be going up at 11:59 p.m. Black Friday evening. It's Friday evening at 11:59 p.m. So get in before that Black Friday sale ends. Use coupon code Black Friday for the programs on Building Your Wealth link down below. We've got some incredible feedback you can check out as well. Go to metkevin.com/chat. That's the Discord. And you can check out some of the amazing feedback that has been posted there. Very honest feedback that people post every day. People are posting different feedback, so check that out. But anyway, folks, the stock market is rallying right now in confidence, and we're worried that there are things that could derail it, like the debt ceiling and the budget deficit, these negotiations, although we probably won't see those pressures until we actually get into December, maybe after the Thanksgiving and Black Friday holiday, and then we'll kind of also be nervous about, okay, how good were sales, and right now we're expecting those sales to be really, really good. Now, we could end up seeing a buy the rumor, sell the news, where people are buying the rumor on sales being really good, and we end up having a sell-off after the Black Friday and Cyber Monday holiday, or Cyber Monday week, however. But I think probably the big thing, if anything, that is going to shake up the market a little bit over the next 4 days is the potential announcement as to whether or not Jerome Powell will be replaced or not. Now, if you look at PredictIt, we've got lael brainard having about a 35% chance of replacing Jerome Powell. If you look at Betfair, they have another website on the betting odds. Her odds of actually replacing Jerome Powell fell substantially today, but these websites, you can't really put a lot of money into them. They're smaller, so some individuals say like, okay, you get smaller bets in here that kind of prevents certain whales from coming in and making big bets or outsized bets. But overall, it seems like the market's pricing in a less than 50% chance that we're going to have lael brainard as a chairwoman of the Federal Reserve. And the market has, I think, started rallying a little bit since we first heard that Jerome Powell could get replaced a few days, well, probably last week. Or roughly last week. And the reason we've seen a little bit of a rally from what it was initially a little bit of a panic, the market turned right at the beginning of last week because of concern over Jerome Powell getting replaced, because of the uncertainty of, okay, well, what if we get somebody else? And what if they start raising rates? And what if, basically they end the taper faster and they raise rates? I mean, think about somebody like Bullard. Bullard's a hawk. He wants to end the taper in Q1 and start raising rates in Q1 of 2022 to rein in inflation. Now, I did a full thesis yesterday on the implosion of the Federal Reserve. I highly recommend you watch it because I showed two scenarios. One scenario where the Federal Reserve is entirely wrong and they have to panic react and the recession that could create, and another scenario where the Federal Reserve is right. You should watch those so you can watch for the signals that show you which path we're on. Very, very good video. Just type into YouTube, Meet Kevin, Implosion of the Federal Reserve. But we now have a time frame for when we're expecting to hear whether or not Jerome Powell is going to get replaced. And according to Joe Biden, an answer is expected within the next 4 days, which means by Friday, we are expecting an answer on whether or not Jerome Powell will be replaced. Now, the good news is the current expected alternate to Jerome Powell would be lael brainard. If she ends up getting the nomination, surprisingly, the market is kind of okay with it. So far, we've got Bloomberg analysts, we've got economists, we've got barons, a lot of folks saying that lael brainard is essentially just like Jerome Powell. We're not expecting much of a difference at all, and really we shouldn't expect much of a market hit. If anything, she might even be slightly more dovish than Jerome Powell, which means more cheap money for longer. She also believes in the strength of the economy, but doesn't quite believe that we're at full employment yet, and believes that we still need to be supportive of the economy, because the last thing we want to do is end up taking away support, and then all of a sudden when temporary inflation goes away, their version of temporary inflation, this is their version, okay? If their version of temporary inflation goes away because supply chain constraints evaporate, which we've kind of already started seeing happen, still problems, but started happen with Walmart and other companies, then the last thing the Fed wants to do is pull the rug out on a market that's in an economy that's actually weakening because prices are starting to go down. We're starting to see the potential for deflation, right? So they don't want that to happen. So deflation gets bad because then you get deflationary spirals where basically people stop spending money because they're worried that, well, why would I spend money now? It's like the opposite of what happens with inflation, right? If you're worried about deflation, then you're thinking, well, prices are going to be less in the future, so I'll just save my money and not spend. Well, if you don't spend, the velocity of money falls and economic growth, our economic engine, falls substantially. Every dollar you don't spend is $5 that aren't circulating around in the economy, which is bad. The government and the Federal Reserve want people spending money. This is why we started this video out with, yay, consumers are spending now. I don't think it's a good idea to spend that much money, but hey, I'm not in control of all consumers. So they want to spend money like crazy. Hey, go for it, whatever. So we should know within the next 4 days. Keep in mind, again, if you have inflation, you also tend to see people moving up their purchases, which is kind of what the former executive from Macy's was saying on CNBC earlier today. He's suggesting that, hey, look, people expect inflation, so they buy stuff earlier because they think prices are going to be higher in the future. And then that future point comes around and they say, like, well, I've already bought, so I don't need to buy again. That's what they say, but the reality is they end up spending twice. They buy both times, which is kind of crazy, but also really good for stocks and people buying stuff. So overall, this is very bullish. I'm not nervous about the Federal Reserve pick anymore, and this is mostly because of the research that I put together in yesterday's video, but also now this time frame. I'm not very worried about it. I actually think once this announcement comes, it'll kind of be a sigh of relief, like for the markets, and if anything, we could actually push higher. I think probably the biggest negative catalyst would be terrible misses for Black Friday and Cyber Monday sales. That would be very bad. We tend to get that data very quickly. And then some form of a congressional disaster at the beginning of December because of the debt ceiling and budget crisis and potentially a government shutdown. Those periods of uncertainties are great times to buy the dip. It's like it always gets solved. It's so stupid. And even if it doesn't, just buying the dip. It's like, oh, best time to buy. So I'd rather wait for that and kind of hope for a little bit of panic so that way I can buy the dip. Because right now there's very little dip, with the exception of certain companies that have just unfortunately been casted aside as not very sexy in the market. And I think this really has to do with a thesis that I came up with a few days ago, and this is just a total thesis. This does not mean it's right at all. But the thesis I came up with is the concentration of stocks, and the thesis is more easily visually represented. And this is, in my opinion, what the stock market looked like in 2010, maybe, when I started investing. And in 2010, you had sort of very, very dispersed investments. But because of social media, I feel like you're getting, and this sort of momentum movement, you're getting a lot more of a concentrated market. And I think that's why you get these incredible moves of traders blowing up and ridiculously moving valuations for companies like Lucid and Rivian, when they should by no means be that high, but they're that high because they're going up. And when stocks are going up, obviously people are going to buy more, which is very stupid because it ultimately means you're increasing your risk, right? The higher you go, the harder you fall, right? The more you go up, the more potential energy you have to crash, which turns into kinetic as you start inflecting down. And we see that all the time with momentum movers. So just be very, very careful, concentrating and buying as things are running. This is why I like buying the dip, finding support levels, and buying safely. And if you want more of my kind of insights and thoughts and theses, do check out the Stocks and Psychology of Money program. Link down below. Use that Black Friday coupon. You can bundle up as well. Most common bundles are 2 and 5, specifically the stocks and real estate investing group. Bundle 4 is also pretty popular. Check those out, linked down below. Use that coupon code Black Friday, and folks, we'll see you in the next one. Thanks so much for watching this video, and we'll see you. Goodbye.